eventually will result in an economic slowdown. So I'm afraid that the bears on this one have a pretty strong argument that concerns me a lot. You avoid taxation or any sort of, government rules about kidnapping fees or things. Until we get there, which we're absolutely not.
Bill Gates has been selling his stocks to prepare for one of the worst economic disasters in history. Gates is known for being a CEO, and he's even better at capital growth. Through the help of his fund manager, Michael Larson, Gates managed to make $50 billion over the past 20 years. Gates and Larson not only made billions from the bull run, but also successfully prepared for the dot-com bubble and the 2008 recession. This has allowed him to consistently beat the S&P 500 and grow his wealth to new heights. Gates and Larson are now aggressively preparing for what will become one of the worst recessions of all time. It's no secret that the economy is in a tough position. The US economy is undergoing accelerating inflation, the lowest consumer sentiment in history, the Russia-Ukraine war, low consumer savings rates, and record high debt levels. The government pumped trillions of dollars into the economy in 2021. 2022 is the complete opposite of that, with the government pulling back trillions of dollars out of the economy. Gates is especially concerned about the artificial trap that the Fed created for themselves. The economy is currently being hit by a double-edged sword. One edge of the sword is accelerating inflation, and the other edge is the massive level of government debt. The government now has two choices: to destroy the US dollar or crash the economy at the risk of popping the debt bubble. The Fed has decided to go with the second choice of slowing the economy at the risk of an unprecedented collapse. We recently saw the Fed raise interest rates by 75 basis points, which is the largest increase since 1994. This increase helps substantially with slowing inflation, but it comes at substantial risk. First of all, raising rates that sharply means that borrowing will cost significantly more for business investments and mortgages. Rates on the 30-year fixed-rate mortgage recently increased by the largest one-week jump in 35 years. If this increase in interest rates slows the economy too much, it could pop the existing debt bubble and spiral the economy into a recession or depression.
So since we last talked, small thing has happened. Russia has invaded Ukraine, and it feels like we're in a new world. We are going to be seeing higher energy prices, higher food prices for years to come. It seems difficult to see how this resolves itself very quickly. What does that say to you about the economic outlook for the next few years?
Well, it comes on top of the pandemic, where government debt levels were already very, very high, and there were already some supply chain problems. And so it's likely to accelerate the inflationary problems that rich world economies have, and force an increase in interest rates that eventually will result in an economic slowdown. So I'm afraid the bears on this one have a pretty strong argument that concerns me a lot.
The bear thesis that Gates is talking about makes complete sense. A surge in oil prices is strongly correlated with recessions. The gray areas in this chart are periods in which the US economy was in a recession. You can see how every time Brent crude oil crosses $100 per barrel, a recession almost always follows. Brent crude oil is currently at roughly $120 per barrel, signaling that a recession is coming. The reason why a recession almost always follows oil prices breaking $100 is because rising oil prices are a tax against the consumers. High gas prices take money directly out of the consumer's pocket. This not only leaves the consumer with less money to spend, but it also drastically lowers consumer sentiment. The University of Michigan Consumer Sentiment Index shows that the consumer sentiment is currently the lowest it has been since the 2008 recession. The economy works in cycles, with debt levels continuously peaking and bottoming in a cyclical form. Gates and Larson recognized that 2021 represented a period of immense speculation. The complete opposite of this is coming: a considerable economic slowdown. In preparation for a collapse in the US stock market, Gates and Larson have been implementing a variety of hedging strategies. One of these strategies includes shorting stocks. Unlike long positions, short positions don't have to be disclosed to the public. The SEC is trying to change this with a new proposal, but until that goes through, we have no idea what stocks Gates is actually shorting. With that being said, we know that Gates has a short position against Tesla stock, because Elon confirmed it himself. Gates touts himself as a strong supporter for sustainable technologies, but Musk believes that his Tesla short position contradicts this. Musk tweeted that since Gates still has a multi-billion-dollar short position against Tesla, while claiming to help with global warming, I guess I have some trust issues with him too. Gates is already down over $1 billion on his Tesla short position, but he clearly hasn't closed out his position yet. Elon explained how it was $500 million, but then Tesla went up a lot, so now it's $1.5 billion to $2 billion to close it out. Gates and Musk were about to meet to talk about philanthropy, but leaked messages showed that Gates' Tesla short position hindered the meeting from occurring. Gates texted, 7:20 on Wednesday to be clear, to which Elon replied by saying, great. Gates then told Elon that he just landed. Elon said, cool. Do you still have a $500 million short position against Tesla? Gates admitted that he had a short position by replying, sorry to say I haven't closed it out. I would like to discuss philanthropic possibilities. Musk confirms that these leaked messages were true and claims that Gates having a Tesla short position isn't top secret at all. Though Tesla stock experienced substantial price appreciation in 2021, the epitome of the bubble was the rise of NFTs. NFTs like the Bored Ape Yacht Club rose by hundreds of percent before recently dropping by over 80% in 2 months. While there is long-term potential for the Ethereum platform, there's no reason for pictures of apes to be trading for hundreds of thousands of dollars. Gates recently criticized the Bored Ape Yacht Club for the lack of utility that it provides.
I don't know. I mean, obviously, expensive, digital images of monkeys are going to improve the world immensely.
We all agree on that.
And, that's so incredible. Anyway, I'm used to asset classes where, like a farm, where they have output, or a company where they make products. To have an asset class that's 100% based on sort of greater fool theory that somebody's going to pay more for it than I do, and where it has at its heart sort of this anonymity that, you avoid taxation or any sort of, government rules about kidnapping fees or things.
Yeah.
Anyway, I'm not involved in that. I'm not long or short any of those things.
At the time that I'm recording this video, the S&P 500 is still over 15% higher than its pre-pandemic peak. Gates sees no reason for that to be the case. The economy was much stronger before the pandemic hit. Consumer activity was booming, and the supply side was as well. The pandemic has a serious impact on both consumers and suppliers. Money printing can't just boost economic activity back to pre-pandemic levels. The economic impact of the pandemic is still being felt today.
The behavior of people in terms of wanting to travel or go to events or even go to a restaurant, it's been utterly changed by the concerns about this disease. And so until we can say to people that we're tracking this thing so well that actually going out to your job, to a car factory, to a construction site, that those are safe enough that, we feel confident you can do those things. Until we get there, which we're absolutely not, no one should think the government can wave a wand and all of a sudden, the economy is anything like it was before this happened. That awaits either a miracle therapeutic that has an over 95% cure rate or broad usage of the vaccine. And so, we've had a demand side shock and a supply side shock. And that demand side piece is both mediated by fear of infection and by the overall wealth effects of many people losing their jobs, and entire industries will be operating at a far lower level than in a normal economy.
In addition to the economic landscape being fragile, Gates also doesn't believe that the pandemic is over. Gates told the Financial Times that we're still at the risk of this pandemic generating a variant that would be even more transmissive and even more fatal. He explained further by saying that it's not likely, I don't want to be a voice of doom and gloom, but it's way above a 5% risk that this pandemic we haven't seen the worst of it. So not only do we have high inflation and liabilities, but also a pandemic that could still get worse. All of these factors combined put the US at risk of a frightening economic and social crisis. Gates mentioned productive assets as his specialty when it comes to investing, but he actually has been selling his assets. His most recent quarterly filing for the first quarter of 2022 revealed that he sold millions of shares in a variety of companies. This included over $1.3 billion of Berkshire Hathaway, over $500 million of Caterpillar, and a vast array of other stocks. In order to understand why Gates is selling his stocks, we have to dive into Michael Larson's strategy. Larson is the brains behind the operation. He knows exactly how to maximize alpha, which is known in the investment world as the risk-adjusted return. While the market crashed immensely during the 2008 recession, Gates experienced a very small decline in his net worth according to sources close to him. Although Larson's strategy has remained secretive, we note from public filings that he mirrors Buffett's investment strategy. If we take a look at the holdings in Gates' portfolio, we can see how most of the companies would not be impacted by economic fluctuations. One instance of this is waste management stock, which Gates owns $3 billion of. Nobody is going to stop dumping their waste because the stock market is down 50%. Another component of Larson's strategy includes diversifying into other asset classes. Gates is the largest US private owner of farmland for two reasons: high alpha and diversification. Farmland averaged a return of over 11% from 1991 to 2018, with not a single year being negative. This is because during a recession, people are not going to stop eating food. This allows farmland to have a high alpha because it delivers high returns with little to no downside. Larson is also known for investing in alternative assets such as private equity, which involves buying out private companies. Similar to farmland, private equity is a sector that's not available to retail investors like you and me. However, for Gates, private equity is a fantastic way to hedge his portfolio further through diversification. Let me know whether you are selling stocks like Gates down below. If you enjoyed this video, please hit the like button and subscribe, and I'll see you in the next one.